Okay, good morning, everybody. Welcome to the ARMR Insider morning call. You're looking at a chart of GrowGen. And let's change that. That's just for fun. We're going to talk about GrowGen in a minute. But let's start with a review of the chart pattern of the S&P. That's where I like to begin the day, getting my head straight for the trade. So here's where we are in the cycle. This is a grind higher market. As I discussed with you way back on the 7th, I thought we were entering that phase, and that's what we're doing. And the evidence of that grind higher is VIX, which is just imploding, right? Just every day grinds lower. Okay, so not much to say here. It's steady as she goes, guys. Steady as she goes. Okay, we're looking for continued movement higher until such time as this rally, fades, and we don't know when that's going to be. So we just stick to the process. Stick to the process. Look for opportunities. Book profits where we have to. Cut losses when we hit stops. That's where we're in the managed success mode. Okay. So what I tweeted out this morning, we tweeted out the Home Depot earnings and the Walmart earnings were blowouts. Okay, but then I tweeted to you that the key now is what the market does with the information. The blowouts were awesome, but will they sell them on the news because the street will this is the key question to me. Will the street look at those numbers and say, we've reached a new paradigm and these stocks deserve higher multiples? Or will the street look at the numbers and say, these companies are pulling forward business, and when the pandemic is over, their business will fall off a cliff? If the street goes that direction, these stocks are going to sell off on the news. I just don't know. Right now, Walmart's down on the news. Home Depot's up a tad. And we won't know until really the end of the day, the end of the week, right? So we don't try to guess. We have our stops in place, and we'll let the market play out, right? If these things roll over, break down, hit stops, we get out. Okay? If they grind higher and make new highs, which I think they will, because we're in that type of market, and I don't think that this is a pull forward for Walmart. I think when the pandemic is over, people are using Walmart's online platform at a degree never seen before. I think that's sticky. I think people will keep doing that, but it really doesn't matter what I think. It matters what, big institutions think, the elephants in the room. And we're like cheetahs on, the Masai Mara plains, and the big elephants are going boom, boom, boom. We got to run in between their legs. So we'll watch, we'll use our stops, and we'll see how this all plays out. But I'm not surprised to see Walmart down on a blowout number, because the knee-jerk reaction is that's a pull forward number, so let's sell on the news. Gold and silver. Let's take a look at gold and silver here. Let's look at GDX actually, okay? So we completed the island reversal. It's something I absolutely adore. Now this is a small island reversal, so some of the best island reversal. Oh, you're not looking at it because I'm talking to you. Okay. So the best island. So did you you guys didn't see any of that, right? I was just looking at a blank screen. All right, I need more coffee. Okay, so what we're seeing here is an island reversal, which means you have a gap down, it trades sideways, and then it gaps back up, and it leaves a little island of price movement. Okay, that's right in here, that little island. And so typically that's a very bullish sign. You can have island reversals to the upside or the downside. I'll give you an example. Let's go look at the S&P. I'm gonna move this for a second so you can see it. So look at that island reversal right here. See, that was a negative island reversal. It gapped up, traded sideways for 3 days, gapped down, and then the market kind of suffered. It didn't go a lot lower, but it did suffer a little bit, right? So island reversals can happen in either direction, and for the gold mining stocks, that's a bullish island reversal. So what I said to you guys a couple days was, after the big down day, the very next day I said we're adding to positions that are still in the portfolio that didn't get stopped out, because that's the ARMR investing way. We follow a process, and the net worth results come later. But we just execute a process, right? And so that was the right day to buy because we're closest to the stop. If we take out the low of the big down day, which would have taken out the uptrend, which would have taken out the 50-day moving average, we would have sold everything, right? So that's the day to add. Now it gaps up. I said yesterday, if we close above the 25 and the 14-day moving averages, we want to have the rest of our positions on because we're not buying another share of gold miners for the rest of this run. Our next trade will be selling some. Okay? And so we're all in there. Whatever we want to be on, we're on. And of course, gold's up another 1%, silver's up another 3%, and I expect these assets to take out the highs. That's my guess. I'm not trading AGQ again right now. And let me just be clear on this so everybody's on the same page. I don't like SLV. I don't like AGQ because it's 2 times SLV. I don't think the ETF SLV has real silver behind it. So it's not an investable asset. All I was doing for us back here on AGQ, all I was doing, I was saying to you, we're about to have a short squeeze in silver. And so let's take an asset that we can trade that's twice the performance of silver. And we got it. And we literally bought it right here, and we literally sold it up here. We sold it before the collapse, okay? We got everything we could out of that trade. So what I've suggested back here, instead of adding more AGQ, personally, I was adding a little more PSLV because that's the investment. I can hold this stock long term. This company has unallocated silver, or should I call it allocated silver? What I'm trying to say is there's silver bars allocated to your shares. Serial numbers go with the shares you own. The bars are in a vault held outside the banking system, so there's no rehypothecation. Okay, the bars are supposed to be there, and they're audited 4 times a year, so it's legit. That's the investment. And so I can own 5% of AGQ, which I think isn't a real investment. I mean, it is, but you understand what I'm saying, right? I hope. Or I can own 10% of PSLV. It's the same thing. I mean, AGQ is twice SLV, so I can own 10% of PSLV. I have the same exposure, okay? So I don't need AGQ, and I'm not trading it again right now, okay? So now I'm going to reveal for you guys. Let's get on to this stock right now, okay? Let's talk about GrowGeneration. And then I'm going to reveal for you guys a new ARMR investing rule of the road. All right. So we already know this picture. It's just fun to go over it again, right? We bought it at 350, right? They did a secondary. This is something you guys can always remember. When a company does a secondary and the secondary was priced at $5.60. The stock never went below $6. That just tells you how strong the demand is for that secondary. Institutions loved the story. And when it broke the downtrend, that's the day to buy it, telling you that the secondary is complete and the demand is strong and it's going to start coming into the stock. And it's not coming down to that secondary price. That's what you want to see on a secondary, right? So we bought it. All right. So then they had earnings announcement and it skyrocketed 43% in that day. And I said to you guys, I know that the ARMR investing rule of the road, the ARMR investing way, is to book some profits at the 5 standard deviation mark, which is right here. When you're 5 standard deviations above the 200-day, you book some profits, okay? But I'm not doing it, I said. And I'm not doing it because that's the greatest earnings announcement I've heard in 30 years, and that's not hyperbole, okay? So then the market went up another 10%, then yesterday it up another 24%, and this morning it looks like it's going to open up another 7%, okay? And now, how many standard deviations are we now? This will be interesting to do. Let's check 7. Not quite 7. So somewhere around 6 standard deviations were above the 200-day. Okay? So there were 6 standard deviations above the 200-day. Okay? I will be selling some this morning. And here's the reason why. If we don't follow the ARMR Investing Way process, if we don't do it all the time, if we start assuming we know what the market's going to do with a stock, we're on the road to ruin. Okay? If this is the one stock that goes straight to 50 from 7, our last entry point, so be it. The other 99 will reverse. And so this one stock will have this unbelievable performance, and then we'll start to believe that every stock we touch does that, right? And then you'll go through this awful period where you just keep giving away gains because you have this memory of GrowGen and you didn't execute the process. I hate to sell it today. I don't want to sell it today. That's precisely when to sell some. We buy weakness and we sell into strength. That's what we do. No matter how much we hate it. So I waited because that conference call was unreal. And so I said, okay, I'm waiting. This is going to go up more. Now it's completely out of hand. And this, my friends, I offer you as another ARMR Investing rule of the road. When you're long a stock and the stock is going through the roof, and then the CEO gets interviewed by Kramer, you sell some the next morning. You just do. Okay? I guarantee, I haven't done a statistical analysis of it, but if I did, and we looked at situations like this, and then the CEO comes on and talks to Kramer, I would bet dollars to donuts, as my dad used to say. I would bet my dollars to your donuts, okay, that 90% of the time the stocks top out right there, bang. Now, I think this is a big long-term idea, but I think it's got to consolidate. I think it's got to take some time. It's up almost 100% from, it's up more than 100% from our last entry. We paid $7.14. The stock is right now looking at $17.59. Okay? We're up more than 100% since July 14th. So it's a month. It's a little over a month. And then Jim Cramer interviews the CEO. The stock's up 100% in a month. And then Jim Cramer interviews the CEO. ARMR Investing rule of the road. You're up 100% in a month and the CEO goes to talk to Jim Cramer, you sell some. Okay? So I'm going to leave up to you how much to sell. Even if you can't stand it and you think this is going to the moon, 5% sell 10%. Get in the habit of managing capital correctly and managing risk correctly. Because when you get in that habit, let's say you just sell 10% and then the stock craters today and you hate yourself for not selling more, but you'll remember the next time, hey, that worked. I booked some profit. This time I'm going to book 25%. Okay? I'm going to leave it up to you guys what to do. Because we're all different. Swing traders might book 50%. Right? If you're an investor, you might book just 10%, but you do something. And there's different ways to do it. Like I might book 10% right here at the open, say, okay, I'm going to book 10%. And if it closes down today, I might book another 10%. Okay? You can also look at this chart on runaway assets like this. Sometimes it's best to, it's going up every day. So when it takes out the low of the previous day, like we can't use our usual stops, right? Our trailed stop, the 14 day is all the way down here, 25 days down here. You can't wait for that. That's not a stop. Okay? So sometimes in a situation like this, it's best to use the low of the previous day as a stop. So if you say to me, I don't want to sell any, I say, okay, well then at least use the low of yesterday as a place where you sell some. Come up with a reasonable exit strategy for a part of this position. I'm not selling all of it. I'm going to trade around the core. I'm going to book a percentage up here, then I'm going to let it run. If it runs another 100%, so what? Great. I keep making money. You know, if you're greedy, that's when things get ugly. You know what they say in the market? Bulls and bears make money and pigs get slaughtered. Okay? So those are my thoughts today on GrowGeneration. Now, if you wanted a reason to sell, if you need help fundamentally, then I'm going to tell you this. I watched that interview last night, and what I thought, the number one thing I thought was, I don't know if the founders of this company are the guys to take this company to the next level. And I don't know when that matters. I mean, the stock could run to 50 for all I know right now. But it definitely concerns me a little bit. I loved everything about the story. I loved the numbers. It looks like a home run, runaway idea. But I'm not sure that the management, the founders, whom I respect, they had a vision and they came up with a brilliant plan and they're executing well. But when the business explodes, are these the guys to take it to the next level? That's what I'm not sure of. I'm going to tell you a quick story. There's a company out there. When I first got into the business, I met the management team of the company, Jerry Yang, and I can't remember his partner at the time. They were the founders of the company. It was a brilliant business. I came out of that meeting and I went to my dad and I said, Dad, this is the greatest story I've ever heard, which was kind of funny, that first year in the business. Okay. The stock was 30. It went to 40. Then it collapsed to 15. And then it went to 400. The name of that company was Yahoo. First year I was in the business. Sat down face to face, had a conversation with the CEO of the company. The reason it went from 40 to 15 is that the growth of that business was so astounding. The founders were not prepared to capitalize on it correctly. And they needed help. And then they brought in Eric Schmidt. That name might sound familiar to you. You might know him as the CEO of Google. But he started, actually, he was known in the technology industry for turning around companies. Novell was he was just coming off of a major success in a company called Novell, which was a stock I bought at 6 and the stock went to 26 on the back of his turning the company around. This is the first year I got in business, okay? When they hired Eric Schmidt on to run Yahoo, that was the beginning of a massive move in the stock. So there was this hiccup in the progression of Yahoo's business because the founders were not prepared to run a company of that magnitude. And they had to bring in talent. And so when I watched that interview last night, that's what it reminded me of. These guys, brilliant visionaries, they've got a tiger by the tail. And I'm just wondering, at what point does the street start to think they need a real CEO to come in here and run this business? And does that put the brakes on the stock for a while? I don't know. That's just a fundamental thought for you guys before we get carried away with GrowGeneration, turning into the next Home Depot overnight. There'll be a lot of bumps in the road, and they're going to need a steward who knows how to drive that bus. Okay? So for all of those reasons, and a Jim Cramer interview last night, I'm booking some profits this morning, and I'm going to trade around the core. Okay? Now let's just wrap up real quick with just a couple of charts. Pinterest, I already did a video yesterday about Pinterest. If you guys missed it, go back to yesterday's Slack room and take a look. I tried to express what's going on here in Pinterest. It's possible that this stock is going to hold this gap up right here. And if it stays above the 14-day moving average and breaks out, we're going to have a Facebook-style run in this company. And so I'm putting this position on here. I'm not going to take up time today talking about it. I talked about it yesterday. If you got a question for me directly, I can answer it, at some other time. But that chart, that chart speaks volumes to me. But again, if it takes out the low right in here where the stop is, we'll be gone. Okay? We added Spotify back to the account. We want to own shares of Spotify. It did exactly what I'm looking for. Closed back above the 25 and the 14-day moving average, having found support on the 50. I'm surprised that stock's not down more after that earnings announcement. So it seems like the street really understands this business. They're spending a lot now looking for revenue to come in later in the year, and the street accepts that. I like that chart. And I'm still looking at DraftKings, still trying to figure out what I want to do with this. And I decided yesterday I need the stock to close above this downtrend for me to get invested. And so I'm going to just step aside and see how this thing trades for another day or two. Okay? Any questions before I split? What's the number on LODB for GrowGen? Well, LODB is not the stop anymore, Chad, right? LODB is like eons ago. So I'm not using LODB as a stop. The stop, well, again, let's go over this real quick, right? The stop is going to be, the trailed stop for the core position is going to probably be the 14 or the 25-day moving average, depending on how it trades. If you wanted a much more aggressive stop, you'd have to use the low of yesterday. But I'm not going to wait for it to get down to the low of yesterday. I'm going to be booking some profits on the 10% gap up this morning. I mean, I'm not even waiting. The market's going to open. I'm going to book some profits. That's just how I'm trading it. You guys do whatever you want and figure out whatever percentage works for you. All right, how much deviation on Tesla above the 200 might book some profits today on Tesla? Okay, let's take a look. Let's see where we are in Tesla. It's not that far away. Let's look at the 4 standard deviation line. No, it's not even at 4 standard deviations. So yeah, it ran up here and put in a top and then traded sideways for almost a month, and now it's breaking out again. So, you know, you're looking somewhere up here. Look back here. It went even 5 standard. It looks like 4 is a pretty good number, though. When it goes 4 standard deviations above, that usually seems to be where it peaks out. So that's a lot higher right now. So that rule's not going to work for you if you're looking for a reason to sell. That's not the reason. Okay, any other questions? All right, guys, that's it. I'll see you in the Slack room. Let's have a good day trading.